All right. What's going on, everybody? Good morning. Thanks for joining me this Sunday, at least morning for us on the West Coast. I know it's a little later. For those of you who are on the East Coast, Coffee and Stocks with Paul today. Wait a few minutes here. Give me a shout out. Let's see who's in here. We'll wait a few minutes for everyone to get in here. All right. Thank you, Andrew. I always ask if you can see my face, see the screen, and hear me. Of course, hearing me is the most important in seeing my screen. Give me a shout out. Let's see who's in here. Andrew's in here. Martin, what's going on? Martin's from London, where my wife was born. And it's 1700 there. So military time, that would be 5 o'clock. All right. All right. What's going on? Reef, I hope I'm saying your name right. Reed, what's going on? There's so many of you in here. This thing is just going fast. We've got a great turnout today, so hopefully I don't forget anybody here. Amin, what's going on? Kevin, what's going on? Kevin's from New York. Amin's from Northern Cali, as where I'm big Niners fan, but I'm out here in San Diego now. Luis, what's going on? Matthew, Tim, what's going on? Tim's in Oregon, West Coast. Kevin, what's going on? Tay from Singapore. It's 000 hours there. I think. Does that mean midnight? I'm not sure what 000 is. Samit, what's going on? Anthony, how's it going? All right, today, what are we going to talk about? We're going to talk about our usual, those of you who do the coffee and stocks with Paul, what I do here. We always start with market analysis. We're going to analyze what's going on in the market right now. We're going to get into earnings season a little bit. Favorite time of the year, the 4 times, about a month and a half each, so about half the year we're in earnings season. One of my favorite parts of trading is trading around earnings. It's early in the season. We've had banks report. We've had some airlines report. And this week is the week because it's going to be reporting. So we're going to talk a little about that. And I'm going to give you a little introduction to the IRA trading course that we're going to be starting the week of August 18th. More information later. We'll do a webinar on it. But just to let you guys know, we're going to have a class on that, retirement planning, and essentially trading out of our IRAs. And a little different than what we do here in the swing service, but a lot of the concepts are the same. It'll be more focused around portfolio construction, trading ETFs, which works well if you are actively managing. And we'll be focusing on actively managing that stuff. And the great thing about that, you're going to get a 30% off deal on the monthly. And if you join the swing service, I think you will get 50% off the annual if you join the class. So there'll be more information later. We're not going to talk about it today. We're going to do our usual thing, but we will have a specific webinar on that. And you'll get a really good deal and discount, not only on that, but the swing service as well. All right, guys, let's see who else is in here. Tay, what's going on? Anthony, I hope I'm saying your name right. Is that Gungadia? I hope I got that right. All right, guys. Let's talk about market analysis. Gungadai. There we go. I think I got it right. Gungadai said close. Okay, good. Kevin wants to talk one-on-one. Why don't you shoot me an email? You've got my contact here, singhjd1@aol.com. And if you need my contact information, take a snapshot of this. Of course, Bulls on Wall Street, my own website, Paul J. Singh. Twitter, posting almost every day. Instagram stories. I post videos and stories almost every day on what's going on in the market. So tons of free, valuable stuff as well. All right, let's get to the market. And as we can see here, the S&P 500 is on fire, hitting all-time highs. And what's interesting here is even though, let me change this up a little bit here. Even though the S&P 500 hit all-time highs on Friday, it was a pretty shaky week and an end to the week before. It looked very weak. We had the big gap down to the 50-day moving average. We did not panic during this period. We got stopped out of a few positions, but we held on, and the ones that didn't hit stops, we kept in them, even though it was tough to do because if it had gapped down some more, we might have taken a little bit of a hit. But those stocks recovered very quickly. We were able to take profits in Roku. You can see this thing was on fire. But if we look back here, we were talking about this as this was happening, that the go-to play since March 2020, which was the pandemic low, has been every one of these scary spots has been a buying opportunity. And it can be tough to do because, even now we look back, it seems pretty obvious. When it's happening, it's tough, especially this last one. This was a pretty big drop to the 50-day moving average. But these areas have done one of two things. One, the one thing they haven't done is completely broken down. And some of these even look toppish, but still did not break down. So that has not happened. So one of two things has happened. Either we violate the 50-day moving average, pull back a little bit, but then get a remount, and that remount is a good buying opportunity and sets the next big trend and test of highs and break of high. Or it goes right to the 50-day moving averages and bounces from that point. And that's what we were waiting for. And as we saw here, went right to the 50-day moving average and bounced, and now we're at highs. So we saw that in SPY. We saw the same thing in the Qs, and the Qs are at the all-time highs. Not only is it at all-time highs, it's showing relative strength. And as you can see, it didn't even test its 50-day moving average. It barely violated the 9 EMAs and back on trend and at highs. Huge week for the Qs this week because all of the FANG is reporting. Facebook, Amazon, Google, Netflix already reported last week and had really bad earnings. But the rest of FANG is reporting this week and other big tech as well. So obviously, huge week for the Qs. But what's interesting here is the Qs were actually looking somewhat toppish here. Negative volume was coming in. A lot of stocks were looking the same way. Was lagging some of their indexes, but now has come back on. One of my favorite setups, when something looks toppish, but then invalidates that topping pattern and gets back on trend, that often will set up the next big trend in that area. So I really like the Qs right now and tech. And we're to pull up, we're not really getting into it today, but we talk about this when we report every day. Software has been on fire, and a lot of software stocks, not only we're putting in these topping patterns, we're showing a lot of relative weakness to the market, and they have come back strong and led. Let me just actually pull up we won't pull up any stocks, but let's just pull up the software ETF IGV, and you see that it was even more toppish than the Qs were. And you can see here, if you think of this as kind of a head and shoulders pattern, it looked like it was ready to break down here. You see the big pattern forming here. It went right to the neckline, but now look what it has done. Completely invalidated that strong. So we like software so much that we've created a separate software list of software stocks that we like. So get back to what we're going to go over later. Okay, so software has been very strong. Tech has been very strong. Again, huge week for tech. And then I think the week after and the week after that, we're going to get a lot of software stocks reporting. Whoops, let me plug this thing in here. So tech software is where the market has been at. Now, what has been lagging? Small cap apps and some of the quote unquote reopen plays. And we see that here, whereas SPY and the Qs are breaking to all-time highs. IWM has been lagging, and basically in this year, at least 2021 year-long range here with a high of about 235 and a low that just got tested around 208. So we just tested the bottom of the range. We did bounce off that range, so that's good. And then we can see here, we want to see a remount of the 50-day moving average, and then maybe a breakout here. We've had a couple of spots where we looked like we were going to break out, and we didn't. I think what's thrown a monkey wrench in small caps and in a lot of the reopen plays is the fears. Kind of, it feels like 2020 all over again. The fears of the Delta variant of the coronavirus, even though it shouldn't be that big a deal because people are still traveling like crazy. Airlines are doing fantastic. Travel, hospitality, all that stuff, retail is all doing fantastic. The market gets spooked. And we can see that in something like jets, which is airlines. We're going to talk about this in a second, but 4 or 5 airlines that we track have reported, and every single one of them are all pre-pandemic levels in terms of flights, and revenues have increased. Guidance has been really good, everything you'd want to hear in earnings, but look what has happened to these stocks. And this is all related to fear over, the Delta variant and maybe some closing again. And it's probably irrational fear, but it's fear nonetheless. And we see that in this area, which we actually love. So we have our own reopen list here of stocks that are in, airlines, cruise, travel, retail, even industrial metals got really hit during this period, restaurants, all this stuff. And basically all of them have taken a little bit of a nosedive when they were actually leading before all this Delta variant stuff came. And we're watching very closely for this area. We're not making any big jumps at them right now, but we're watching this area very closely to see if they remount some of what are now resistance levels and give us opportunities to get in at good prices. So, of where we are in the market, let's actually look at one more thing. Before this big pullback happened in SPY, we were a little concerned as we were hitting all-time highs because market breadth wasn't that good. So I know a lot of you guys are either report members or you follow me on Twitter, Instagram, or you just attend all the Coffee with Paul's or Coffee and Stocks with Paul. We pay very close attention to not only SPY, but its equal weighted ETF. So for those of you who don't know, SPY, not equally weighted. There are 500 stocks, but not everyone 0.2%, which it should be if there was 500 and we're trying to make 100%, right? So Apple's worth 3%. That's huge compared to some of the other stocks. The top 10 holdings are worth almost 30% of SPY. So very top heavy. And how these things go is how the S&P 500 is likely to go. So what RSP does, it's an equal weighted ETF. It's actually, we'll talk about this a lot in the, we're going to get into ETFs a lot in the that IRA class. But RSP here, notice that it is lagging behind. So RSP takes the 500 stocks in the S&P 500, and whether it's Apple or DR Horton or Facebook or RHI, mRNA, any of these stocks here, they're all worth 0.2%. Nothing is worth more than the other. This gives us a better idea of what's happening in the broader market, at least for these big 500 companies. And as we can see here, not only was it weaker in terms of how deep it pulled back, notice this, notice this right here. SPY made a higher low here when it tested the low. It never broke the exact date here, the June 18th low. RSP did. You can see here, this was a negative divergence. It broke below that level, and still now, back here, it was, and here it didn't make an all-time high when SPY did. And now as it's bounced, it is not at all-time highs while SPY is. So a little bit of concern related to market breadth in that still there are just certain, especially the bigger stocks that are doing really well. And there are still other areas in the market that are not doing so well. And in a broad, in a really strong booming market, we want to see a broad-based rally. And maybe that's been lagging a little bit. There's still really good opportunities in certain areas. We talked about being tech heavy, staying away from the reopen type stuff right now and seeing if they'll improve. And now with the Qs, you can do that here with, so here we have the Qs, and this is 100 stocks in the NASDAQ. The Qs will equally weight it with QQEW. And what's most notable here is QQEW might be lagging a little bit of Qs, but it's very close. Both are making all-time highs. QQEW pulled back a little closer to the 50-day moving average, so maybe it's lagging a little bit, but not as much of a concern. So right away, I'm telling you, the health of tech is stronger than of the S&P 500. And you can do that with IWM also. And I'm actually, my mind's blanking and I forgot what the equal weighted ETF is to IWM, but you can do it with IWM. IWM is already weak anyway, so we know that. And we looked at the reopened stocks, and those are more related to IWM as well. So we know that that's lagging. And the fact that IWM is lagging, because again, in a broad-based rally in a booming market, we want to see small caps and some of these other areas keeping up with SPY. And in really strong rallies, IWM will actually sometimes lead SPY. And that's not happening right now. So the point of all this is, on the surface, the market looks really good, and it is pretty good, but there are some concerns. So the way I take that is, one, it helps me know where to be by doing this analysis. I think right now you just got an idea of some of the areas we should be going towards and some of the areas we should be maybe cautious with. And then overall account aggression. So, whatever your account size is, you don't always have to have all of it in the market. Maybe during this period, you say, you know what, I want 70% in right now. If the market improves, I'll go to 100 or maybe even go on margin. If the market's really bad, maybe you only put 10 or 20% in. So this helps guide you with how aggressive you want to be. And this is important as a swing trader. You want to know those spots where you really push it and those spots where you dial back. And here, I wouldn't say you have to dial back big, but a little caution because of some of these things we talked about in the market is probably the best way to go about it right now. And that's what we're doing. We're definitely taking positions, but we're not getting like hugely aggressive where we say now we just put the pedal to the metal and maybe even go on margin, safely go on margin with risk. Okay, so that's our market analysis. If you guys have any questions, shoot me a message here in the chat and I'll get to them. Now let's talk about earnings season. So earnings season is underway. Earnings season, it starts with the banks starting to report. So the Goldman Sachs, the Bank of Americas, the JP Morgans, those guys will report. Airlines have reported. We have some breakouts and breakdowns. I'll show you some of those in a second here. And then this week is a huge week. So if you're trading, you definitely should be paying attention to the FANG stocks this week. So let's first talk about banks. You can look at XLF, which is financials. There's actually a bank CTF as well, but we just, it's easy to just look at XLF. So if we look here, financials, a little weak, but not completely broke down, just under the 50-day moving average. And I will tell you, I'm watching this index very closely for a remount of the 50-day moving average. If it remounts, it's back on trend. And you can see banks have been very strong. Financials have been very strong since the pandemic low. You can see way above the pre-pandemic levels. So banks have been strong, financials have been strong. But what was interesting here is these guys, when they reported, you can see almost the same pattern. Some of them had big breakouts. In fact, they've been weak since reporting. Bank of America had a horrible move here. And then you see JP Morgan, Goldman Sachs. But what's interesting is they actually posted good earnings and good numbers. And I watch that very closely. If you don't see much of a reaction, but the actual numbers were good, I keep an eye on that and I wait for potential reversals of these pullbacks to go long. We're not there yet. Again, I'm watching very closely for XLF to remount the 50-day moving average, but I would definitely pay attention to banks knowing that they actually posted good numbers. Most of them did. Bank of America's were a little concerning, but most of them posted good numbers. And if they rebound now and get back on trend, I think they have the fundamentals. We don't pay much attention to fundamentals, but just knowing what was in the earnings reports that they could potentially make big runs because they're doing well. Now let's talk about airlines. So here's Jets, the ETF, and you can see here pretty weak and needs to remount the 200-day moving average and the 50-day moving average to get back on trend. Big bottoming formation here. Continuation pattern has basically tested this breakout range of the entire bottoming formation right now. So what do we know about airlines? One, we know that there's some fear because of the Delta variant. Whatever we think about that, whatever we think about vaccines, we know that's what is impacting, whether it's irrational or not. That's what's impacting these guys here. We also know that travel has been booming, that every one of the airlines had good guidance. We're almost at pre-pandemic levels. So we would have expected breakouts. So, if we look at Delta here, almost the same pattern as Jets. If we look at UAL actually did break out on earnings. You can see right here, they posted very good numbers and it broke out, but still the overall pattern has not really improved that much yet. But I am watching airlines very closely. Here's Southwest Airlines. I'm not sure if Alaskan has reported yet. No. Oh, yeah, they have. And it's actually a little stronger. It's already above its 200-day moving average. But definitely should be watching airlines very closely, especially knowing that the numbers are good. that their earnings have been good. There's, with almost all of them, there's a little concern about debt because of the debt they had to take on during this, period of 2020 and early 2021, and maybe some energy cost stuff. But again, the numbers are really good. If this Delta variant stuff gets put to the back burner, I think this area could really run, especially knowing the numbers are good. So definitely an area, not in it yet. We've traded it a lot, during this period, but not in it yet, but watching very closely for now. You can know all this fundamental stuff, but at the end of the day, it's about price action and the technical pattern. So now we're just waiting for improvement of the technical patterns for us. Okay, all right, so that's airlines. Let's talk about some breakouts and breakdowns. Every day during earnings season, I'm tracking for stocks that broke out or broke down related to earnings. And here is the start of the breakout list. So I've got 5 stocks on it right now. Let's just go through these. Here's Domino's. You can see a huge breakout this week. Gap, and I don't know what percentage this was, but this is obviously a big percentage gain. Day before earnings, it was at 475, and now it's at 525. And then we have 6 or 7 different patterns we watch related to earnings breakouts that we're looking for developing. What's really interesting right now is if this thing broke out, if it consolidates near the top of the range and then breaks that range, that would be our high tide flag. So we were essentially looking for something like this, the big breakout. If it consolidates near the top of the range and then breaks that range, we'll be looking to get in. So we don't know now if DPZ is going to do that. Maybe it pulls back and then we look at it as a pullback play. But for now, since the second day was at the top of the range, I'm watching for that very closely. Does it start to consolidate here and break? Snapchat, huge gap here, 23%. Big volume here. Definitely the type of breakout. Look at that. What's really nice here is it broke out over about a 7 or 8 month run. When you get a breakout like this that breaks a big range, that often sets the next big run. Look what it did here back in October. This could be the same exact thing. You can see it broke a big range here, gapped up to 37, and then was up, almost went up 100% in a few months. So looks like Snapchat could be setting up for a similar type of move. Chipotle, also big breakout. Again, what I love about this breakout is breakout over this big range here. We had Crocs, similar. This range is a little different, and it's been slowly kind of creeping up, but it is still a pretty big range here going back to April. And now we have the breakout. And then Twitter as well. Twitter is maybe not as textbook as these breakouts, but I do like that it gapped. It was only 3%. I'm usually looking for 5%. But I still do like that it broke out over this range here. And I think it could be set up now to test the all-time high here, around 79 or 80. So we will be watching for some setups here. So every earnings season, build a breakout list and then a breakdown list. I only have 2 stocks on the breakdown list right now. That is Sam Adams. You can see here, big gap down. Now, what I like to do is look for reversals on the gap downs in strong stocks. So we know Sam Adams, very strong stock. Look at the move here. Look at this move. This is the pre-pandemic level at 433, and it's sitting up here at 1300. So now when these things gap down, I start looking for potential reversal setups to go long, actually. Sounds counterintuitive because they had bad news and then gap down. Oftentimes these gap downs are overreactions. Now, I'm not going to just jump in because I think that this thing could go down further. But there are specific setups we look for, and if it puts in one of those setups, we'll look for the reversal play. Another one is Intel, one of our big techs here in semiconductors. This gap down here, 5%, so pretty big gap down, you can see here. And I'll watch for a potential reversal there as well. So we're early in the earnings season. As you can see, we only have five or six stocks on the breakouts list right now, 2 stocks on the breakout. By the time the earnings season is over, we'll have 70 to 100 in both categories. So very active time for our earnings breakout and breakdown setups. And now this week, a huge week for big tech. Let's look at some of the earnings dates here. We have here on Monday, we have Tesla. Tuesday, we have Apple, Microsoft, AMD, and Tuesday is a huge day. Wednesday, we have Facebook, and then Thursday, Amazon. So all of the big guys here are reporting this week. And if we look at Amazon here, we've been actually waiting. I would be in Amazon right now. We've been waiting. And if you look at the history of Amazon, when Amazon goes through these like huge, 7 to year-long bases, which is what Amazon has done, you can see here, it's formed this base going to July last year. So this is basically an entire year where it had a top range of about 3,500, a little above 3,500, and a low range of 2,800. And it just recently broke that range. And when it breaks these ranges, it'll often go on huge runs, a type of runs that could send this thing going from like 3,600 to 5,000. So if it wasn't for earnings coming up, I'd already be in this right now once it broke the range right here and then tested the range and bounced. But with earnings coming up, we can wait for earnings. We don't want to gamble through earnings. What if there was a big gap down? But definitely Amazon is in play right now. Facebook, already very strong. You can see the sympathy play because of Snapchat. A lot of social media stocks did very well on Friday because of Snapchat's earnings. So we saw a little bit of a sympathy play with Facebook, but it does have earnings coming up this week. Google, same thing, almost the exact same setup. And then AMD looking good here. And AMD to break this range here, which is about 8 or 9 months, looks like. That would be setting up for another big move. And then Apple is super extended right now. So we'll wait and see what happens with the earnings there. All right, guys, so that's what I wanted to cover today. Let's see if you guys have any questions. And remember, keep an eye out for the IRA trading class. We're going to get into kind of actively managing your long-term type portfolio stuff. And then there's going to be really good deals on the swing service as well. Okay, all right, let's see if you guys have any questions here. And then we'll get out of here and enjoy the rest of our Sunday. Thanks for joining me. Anthony's asking, how do you compare LGIH to Toll? Anthony, you must be a swing member because these are two housing stocks that we are watching on our focus list. First, let's start with XHB, which is the housing ETF. Looks very much like the financials ETF, but already remounted the 50-day moving average. So we are very interested in housing. Toll Brothers is a bigger stock, not that big, 116 million float. So if we look at that, has not remounted 50-day moving average yet. LGIH, and I'm forgetting what their short interest is right now. I always pay attention to the short interest as well. LGIH is a little stronger right now. It has already remounted the 50-day moving average, and it is a lower float, so it has potential for more volatility, which we want, more less volume to make a stronger move. So I do like LGIH a little better. Both of them are good choices. LGIH is already set up. Toll Brothers lagging a little bit. But if it does remount that 50-day moving average, I would get into Toll Brothers as well. But I do like LGIH a little better right now. Amin wants me to look at X and PayPal. I like both. X here, industrial metals. There was a lot of talk about a stimulus package, with Biden and all that about a month and a half ago. And you can see how strong X was because of that. It's pulled back a little bit. I think if those talks, come into play again, we will see a strong move, especially if that stimulus plan passes. Obviously, that's going to impact steel. So the entire steel industry, not X, but CLF, AKS, a bunch of them, and copper like FCX will all do very well. So I do like the setups overall. But again, these kind of like airlines, they're under the 50-day moving average. I need to see them get back on trend. I probably wouldn't enter yet. And then PayPal here. Very strong, ready to break the highs. Earnings this week. And if it breaks out over this range, I think it's, again, set up for a big run. And it's, it made a huge run here, has consolidated some of it. I think it's ready for a big run if it gets that earnings breakout. Okay. Troy, Tesla gaps up on my prediction. Yeah, we'll see. you know, it's kind of gambling, and sometimes they even post good numbers and then they gap down. But we'll see if it gaps up. That would really set it up for a nice run because it's already pulled back so much. So I would love to see a good earnings reaction in Tesla. Ravindra, I do trade low float stocks. Troy, the class will be starting the week of August 15th. And I think it'll be 5 or 6 classes going over 2 weeks. I know you guys will get, if you're on the Bulls email list, you'll get emailed about it. And we're going to do a specific webinar related to it later. I just wanted to introduce you a little bit to it now. DOV was asking if that was, Tim's asking if that was an earnings breakout. It escaped me. I don't know if it did break out. Next earnings is 1019, which means it already had earnings now. So you're right. It has that earnings. It's in industrials. So industrials have been strong and again related to the stimulus plan. Nice breakout here. Okay, I think the reason it didn't come on my radar is when I scan for earnings breakouts, I scan for a gap, and there was no gap here. It actually initially was maybe not so strong, and then throughout the day became very strong. So I missed this one, but yeah, definitely one to be watching right now. I don't think it's set up for a specific trade right now, but definitely worth watching and putting on your list. Tay is asking about Chinese stocks and ETFs. The big one for me for China is FXI, and you can see how weak it is right now. And I also have my own kind of basket here. But yeah, if you're thinking about portfolio construction for IRAs and that type of thing, you'd want to be looking at the ETFs. And I also have a basket of China stocks I look at here. These guys have been very weak, and right now, away from them. Because as you probably know, Tay, the whole thing with Didi, China going after big tech companies or tech companies in general and IPOs that are listed on U.S. markets. That's why Didi, which if it wasn't for that, would probably be on fire right now. And you can see how weak it has been. And then you look at Baba here, same thing. It was actually forming a nice bottoming formation, and when all that news came out, Baba has been weak as well. But FXI is the ETF that I most closely watch. Tim is asking about RHI. Very strong breakout here over the range, 1028. So must have been earnings. This one was actually on my radar. I don't know why I didn't put it in my. And then pretty strong volume as well. Looks good. I like it a lot. Definitely should be on the list. John's asking about NX or NRXP. This is not, there's nothing, I mean, obviously it's had a big breakout here off of kind of a bottom, and not putting in any kind of setup I would trade right now. If I was watching this, I might even be watching for some spot to short. I'd obviously have to be very careful because this thing can gap up big. Maybe use puts if those are available. But these spikes look like they've been good spots when they get extended to short. OSTK, TLR, let's start with TLRY. Pot stock here, and it's basically putting in the pattern of most of the pot stocks right now, which I would not touch unless we get a remount of the 50-day moving average. And if we look at MJ, we're going to see almost the identical pattern. So it needs some technical improvement before I'd even consider entering any of the pot stocks right now. And then OSTK, overall here, still, it's got this range here. I don't think it's anything, it's not set up for an entry right now, but I would definitely be watching it, and it does have earnings on the 29th. So, OSTK is always on my radar, but I don't see a setup that I would trade right now. Steven's asking, do you have a minimum stock price and volume? Not necessarily price, but I do want liquid stocks, and stocks are traded. So on the low end, 200,000 on the volume. Usually I like there to be at least 500,000. Neo electric has been a little weak right now. So we have an electric list here of stocks that are in electric. And this is not just electric cars, but also battery components, solar, and some other kind of interrelated areas. But Neo here, I think it's looking very similar to Tesla right now. Where is it? Here we go. Yeah, so sitting right around the moving averages. The one nice thing here, it did look very strong and it's pulled back. And obviously we'd be looking for the next run here. And it did hold the moving averages. So at the least right now, you have good risk reward. You could maybe place a stop at like 3 or 4 points around. And then this range here goes up to 55. So that'd be 12 points. So you're getting 3 to 1 or 4 to 1. And if you played it for a Tesla high, you'd be getting a really good risk reward. And it has earnings on the 10th of August. Okay, Tim, we'll do one last one here. Tim's asking about Skechers, which is in a hot industry. Yeah, footwear has been on fire. So if we look at Skechers, let's just pull up some other footwear stocks. Here's Nike. Here's Crocs, which is on our earnings breakout list, I believe. Yeah, Crocs has been strong. And then even, Deck here, and even stuff that sells shoes like DKS, and I would imagine Foot Locker as well. Foot Locker's lagging a little bit. But shoes have been on fire, or footwear. And SKX specifically, nice breakout here over the range. Looks like they already had earnings. So this must have been, I think this didn't make my list because it didn't fit my brain requirements. But yeah, I think I would definitely put this on my list for watching for a setup off the breakout. All right, guys. So another great session as usual. Great questions. Really big turnout. So thanks for everyone for joining. And then remember, guys, we do have that class coming up. And not only with that class, but also you'll get huge discounts on the swing service if you're interested on that as well. All right, guys. I will see you guys soon. Bye.